Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MEDPACE Holdings INC quarterly report. MEDPACE Holdings Inc. provides a wide range of businesses and services to the pharmaceutical, biotechnology, and medical device industries. The company's offerings include clinical development services from Phase I to Phase IV development plan, design coordinated central laboratory services, project management regulatory affairs support clinical monitoring data management and analysis pharmacovigilance new drug application submissions, post-marketing clinical support services, bioanalytical laboratory services, clinical human pharmacology studies, imaging services, electrocardiography reading support for clinical trials. These services cater various therapeutic areas, making MEDPACE a comprehensive partner in the clinical research-based drug and medical device development process. MEDPACE Holdings Inc. stock skyrockets. A year of exceptional performance. The remarkable surge in MEDPACE Holdings Inc.'s MEDP stock price by 79.49% over the past year can be attributed to a combination of robust financial performance, strategic business developments, and positive analyst sentiment. Key drivers include exceptional earnings and raised guidance, strong business momentum and backlog growth, share repurchase programs, and positive analyst ratings. MEDPACE's consistent reporting of strong quarterly earnings has exceeded analyst expectations, with revenue jumping 23.7% year-over-year in the third quarter of 2025. The company's growing backlog, reaching $3 billion, indicates robust future revenue visibility. Additionally, MEDPACE's share repurchase program and strategic expansion into digital health partnerships have fueled investor excitement. The collective impact of these factors has propelled MEDPACE Holdings Inc.'s stock to an all-time high, delivering substantial returns to its shareholders over the past year. Net income and profit margins show improvement. The financial performance of a company has shown significant improvement in recent quarters. Net income has increased by 15% in Q3 2025 compared to the same period last year, reaching $111,135. This growth is also reflected in the year-to-date YTD net income, which has risen by 10% to $315,990. Profit margins have also seen an upward trend. The operating margin has increased from 21.1% in Q3 2024 to 23.6% in Q3 2025, while the net income margin has improved from 18% to 16.9%. This improvement is attributed to a combination of factors, including higher revenue and lower operating expenses as a percentage of revenue. The decrease in capital spending as a percentage of revenue may have also contributed to the increase in net income and profit margins. Overall, these results indicate a positive trend in the company's financial performance. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash flow of $21 million for the 9-month period ending September 30, 2025, it is clear that the business is producing positive cash flow. This suggests that the company's revenue and expenses are aligned, allowing it to maintain a healthy financial position. The company's debt level has seen a significant change over the past year. As of September 30, 2025, the debt level increased by 19% compared to December 31, 2024. This indicates that the company has taken on more debt in recent times. However, it is worth noting that lease liabilities actually decreased from $15,417 in 2024 to $18,131 in 2025, which may suggest some offsetting effect on the overall debt level. Management is projecting a positive future for the company, with several key strategies in place. The company plans to adopt new tax standards by 2025, indicating a commitment to regulatory compliance and financial transparency. Additionally, management is focused on delivering high-quality results through a disciplined operating model, which will enable the company to expand operations organically and potentially through selective acquisitions. This growth strategy will be funded through existing cash flow from operations, and borrowings under credit facilities. Overall, management's outlook suggests a focus on steady growth and expansion, driven by a combination of internal initiatives and strategic investments. The company's financial summary reveals that it has not distributed any profits in the form of dividends to its shareholders. In fact, the undistributed earnings allocated to retained share accounts, RSAs, are negative, indicating that all available funds have been retained within the company. This suggests a focus on reinvesting profits rather than distributing them to investors through dividend payments. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights a pressing concern regarding inventory buildup. Direct service costs related to inventory have increased significantly from $34,668,000 in Q3 2024 to $37,000 and $40,000 in Q3 2025, indicating a substantial rise in expenses associated with managing excess stock. Furthermore, year-to-date costs for 2025, $108,813,000, surpass those of 2024, $103,257,000, underscoring the issue's severity. These developments raise concerns about potential supply chain disruptions and the need for more efficient inventory management strategies to mitigate these risks. That concludes the financial summary for MEDPACE Holdings INC. Feel free to comment below, and I will be happy to answer them when possible.